No, aloha everyone. This is going to be a longer video lesson because I'm going to pack in the weekend market analysis along with what happened today. So today, guys, close out a great week. 5 for 5 green every day trading this week. 9 for 10 overall, 9 for 9, or 10 for 10 if we don't count the break-even trade that I screwed up at the end of the day today that ended up running 125%. I got a break-even trade out of that. If we count that as a loss due to EC and fees, then I was 9 for 10. I was 9 for 10, had one break-even trade. But the thing is that this is an end-of-day service. This is a swing trading, position trading service. And right now, that environment is not in vogue. There is too much bifurcation. There's too much narrow leadership in the big mega cap names. Mega cap names, we go long mega cap names. It's the only stocks we buy in the long-term portfolios for 5 to 20-year holds. We buy long-term mega caps on long-term portfolios, buy mega caps on pullbacks, especially in the overall market during bear markets, and or piecemeals into big caps that have mega cap clients. If the stock does not have anything related to a mega cap, it doesn't go in the long-term portfolio. Why? Because this is America. Let's not fool ourselves. We're slowly growing to where we're going to have just 5 companies pretty soon, because I believe it's only 15 stocks in the S&P 500 account for 97% of that index. So this is why in the long-term portfolios, we focus on mega caps. However, the only time frame that's quote, quote, safe, because we don't have to worry about overnight or gap down risk unless you play Chinese low float junk like TOP, and you play it on the backside, that could lead you into now I believe it's a T12 halt. So be careful on those stocks. But besides that, it's all about the intraday. And I know that a lot of people don't have time for intraday trading. That's why I try to tell everybody exactly the levels you should trade. And if you want to join me, make money if you're short for time. Now, if you have time, you're going to find out I'm a terrible day trader. It never has been my style, but we have to adapt and adjust. Well, once again today, I believe this happened every single day this week. I gave out my trade idea with my buy stop at 325 well before the market opened. I do not take these trades pre-market. However, I've always said if you get these levels in pre-market, you can trade them. Just make sure you sell some in the pre before the open. However, if you did not, you got a nice 10% gain in DRMA today. But here's the other issue. I am still implementing break-even stops because I'm only getting 10, 20, 30% moves. I'm not getting 50, 100, 200% moves. GSIT, once again this evening, is an outlier. It is not the norm. When it becomes the norm and the moves are more smooth, I will open it up and get away from these break-even stops. But for now, I must implement them because it's my methodology. So I did not get part of this DRMA move in the morning. Congratulations to everybody. But as soon as it dipped down, you guys know I call it back on every single time. And I got long at 326, got slippage, and they filled me at an average price of 327. I took a trailing buy stop or sell stop on the way up to protect profits up to 330. I can't remember what they got me out on. I posted it in the chat room. Let's see if I got it. Yeah. Oh, wow. 329. So it's not bad, but I got small slippage on the way up, small slippage on the way down. Should have been 326, 330, was 327, 329. Heck, it's better than a loss because it failed. And then it tried it again and failed. I never take it a second time on a reclaim trade if the first reclaim fails the support level. But even if you took it and had to stop out when it moved below here, or took this trade and stopped out below here, was it a bad decision? No, not at all. What would have been bad? Not stopping out and then being stuck as the stock continued to sell off 20% or more. And I bring this up then, once again, because after DRMA, I don't mention another single stock until FFIE. FFIE, I bring up right here. Tell everybody it's perking and curling. A buy stop above this level is good for a move to the highs. I believe that was the high. Yep. Of 6%. I did not take that trade. FFIE was just an idea, but I gave it to everybody right here, told everybody right here, FFIE. Now, before we go to GSIT, which was the only stock, the only alert, the only stock I talked about after noon, before I go to that, I want to talk about TCRX. So TCRX was a stock early on that was on watch. This line has been on this chart since yesterday, right here, when it stuffed this level and stuffed this level at 520. I said in the chat room, somebody made mention, TCRX should be good to go. And I go, I don't think it's going to work unless it gets above 520 and then holds 520. I think they stuff this thing at 550, just like they've done every other time. Well, it didn't even make it to 550. Perks just a little bit above 520, slam. Warned about this seconds before it happened. Seconds before it happened. That, once again, is just reading the chart and being able to tell, hey, something doesn't look right here. But the biggest issue for me is, this is day one of the move. Day two should have broken out and gone. Day three is the last day that these basically bull flags should work. Once you hit day four, if the breakout can't go, you normally get a stuff. So, warned about TCRX, prevented everyone from getting into TCRX if you took my advice, made money on DRMA, gave you guys FFIE on a platter, and then the last and only alert was GSIT. And I botched this trade personally, but after noon, right here, I told everybody, I like GSIT over 360 if it can hold for a move higher. GSIT gets over 360, holds, move higher. What did you get on this move right here? 12%. Or if you held onto the trade before the reversal, 18%. But then it fails. And this is the problem. This is outside of my pay grade. I can't deal with these kind of moves. So I'm going to always miss something that trades like this. If something trades like this, then does this, then chops around, fails support levels, then re-breaks out and moves, I'm going to miss it every time. Now you see the second line at 350. I played this stock at 350. I got long right here, was underwater, and as soon as I got back to break even, I took my profits off the table in case it rolled back over. So I botched this trade. This was a 100% botch trade, break even trade, botch, because from 360 to this post-market high, there was a 125% gain. Now, how do you rejoin it above 360? Well, when it starts to reclaim these 360s and it starts holding 360 like I told you that I wanted it to, you could have had a sell stop right below this level, gotten long this trade, and participated in this 100% plus move. But guys, once again, this is an end of day service. I'm just day trading because I'm adapting with the market. Pretty good at doing it, just don't have a whole lot of confidence and conviction yet, and I can't get away from the break-even stops because if GSIT was the norm, if we saw GSIT like this every single day, we not only had one of these, but one or two, get rid of the break-even stops. Don't have to worry about it. But in this tape, I'm going to keep implementing them, and I'm going to keep my commentary narrow or focused in the intraday chat room. 3 stocks, 3 winners, 1 stock I talked about to avoid, 1 a huge avoider, huge loser. We're going to keep that going. Now, there were other stocks on the radar. Could you have played them? Absolutely. I'm going to get rid of after hours data on these for the rest of them. BLBD was the earnings winner today. It would have failed. Right here, could have done the VWAP reclaim. Fails. Nothing you can do. You can try it again here, but basically goes into the close. You can swing it. Looks like a good swing trade. It's holding this support level. It's good to go. But as an earnings winner play, it didn't work out. CMND, I identified as possibly in play in the pre-market. Mushroom news. Not a big fan of wheat or mushroom news right now without safe banking. So breakout, and still somehow it's still illegal in some states. Well, way to be living in the 16th century, everybody, and not know anything about the science behind it. Way to just hang on to preconceived, brainwashed notions that you have regarding these two items. By the way, don't smoke weed, don't do mushrooms. Very pro weed, very pro mushrooms because of the science, not based on what mommy and daddy told me and brainwashed me into believing. But CMND, perks, a little bit of profit, break-even stops, you're good to go. But even if you don't have break-even stops, you always know sell 50% below VWAP, final stop, and you should be positioned accordingly to this low. It failed, but initially did work a little bit. DRMA we went over, FFIE we went over, FSLR, not an earnings winner, but it's a canceling quality stock, always in play, never, ever went below VWAP. No way to trade it, according to me. Getter was last evening, but I put a buy stop above the high of the day in case you wanted to reclaim it. Never did. GSIT we talked about. HOUR was in play in the pre-market. That would have been the buy stop trigger entry level. No play. Lunar was in play in the pre-market. Too illiquid for me. You guys know that I like to see an average on every trading bar be around 100,000, not 30,000. That being said, you could have had gains, and then with the break-even stop left profitably. If not, 50% of your stop goes below VWAP. Final stop goes below the low before the breakout. And remember, you're always sizing and calculating how much you're willing to risk from the entry to the stop. That's your share size, not 20% of my account into this name every single time. You don't do that. SPRY was not watching it at all with this gap up. Can't remember why this stock was not on my radar at all, but it wasn't. This is when it got on my radar. Breaks out, consolidation, told everybody also about this stock. I actually talked about this stock today too. Said the wicks look trappy, look problematic. That's exactly what happened. Still holding in, but nothing happened. And then, of course, TCRX went over. So that's it. I'm focused on the intraday. I'm talking about the intraday because on the end of day side, I do have some speculative trade ideas, but I am trading my smallest capital allocation per signal ever in the history of my career. I never thought I would ever be this small, but I'm only willing to go smaller until the bifurcation stops. So with that being said, we're going to look at that bifurcation and what I need to see from the market to get me to change my stance on the quarterly swing and position side of things. But for right now, it's intraday or nothing for me. This is where I'm focused. So we'll start out with the relative strength line versus the S&P 500 on the bottom. We're going to look at the indices that I need to see leading on the way up to get super aggressive without grade A setups. For those of you watching this video lesson, I don't think I've done a public YouTube video in a month. I haven't had any grades A setups in 6 months since this rally attempt in October started. I've never gone more than 3 months without a grade A legit setup that wasn't right before earnings within 3 months of a rally attempt. This is the first rally attempt that's ever gone longer than 3 months without any grade A setups. And we're into month 7, I believe. Month 7 or 6 into this rally attempt. But either way, when to get aggressive in the market, we're going to just start off with ARK. When you see the high short float, innovative names, the growth leaders, the speculative names doing this, and the relative strength line looks like this, even this is great in 2016. This is great in 2017. Notice, though, how it does nothing from 2018 to 2019 until we then get into that 2020 period. I had to go back on this chart because this is really pronounced even before this move. But when this relative strength line is doing this, risk on, baby. I want you to look at it currently. Is it doing the same thing as this? I don't think so. Next, FFTY, the IBD 50. Look at the relative strength line, 2016, 2018. Any surprise 2017 was a banger year for me? Nope. 2020, late 2020 to 2021, the only time this relative strength line was strong. Already hinting that something was changing underneath the surface. Now look at it. Is it hinting at major risk on right now with ARK, IBD 50, ARK, risk on or risk off? Looks risk off to me. Another thing I've always done, IWM. When the IWM is leading, go balls to the wall, risk on. And I think it's going to be hard to see on this chart. How far back can I go on it? I can only go back to 2000. But look at what I'm used to. From 1980 to 2010, small caps during every major market cycle led. And every time that they led, I went heavy. Since 2010, gosh, how far back can I go now on this? Since 2010, it led in 2013. Any coincidence? 2013 was a banger year for me. 2014, 2015, back to normal. But even in 2017, thank goodness for those ARC names and IBD names because it lagged. 2018, we're getting back on track. Back to lagging again outside of that period in 2020 into 2021. Since then, straight down. Does that scream risk on or risk off to you? Risk off. Risk off on IWM, risk off on ARC, risk off on FFTY. I've got my marching orders for swings and position trades. Another problem, and this one we can just look at the regular charts. The QQQ is melting up with those 7 to 15 names leading the way higher. Volume is falling. While the QQQ looks like this, while the SPY looks like this, look at the RSP. Look at the QQEW. The QQEW doesn't look as that bad, but compared to the QQQ, it's not aligned, is it? The RSP, it's not aligned, is it? HYG, J and K kind of look like they have a rollover look, kind of like ARC, kind of like FFTY. Doesn't mean we're going to break down to new lows, but is it a screaming risk-on environment? I don't think so. So that's the way you can use relative strength lines to judge if you should be balls to the wall here with new long positions on the swing side or position side, or be careful because stocks like HROW and ANIP are the norms, not the outliers. Stocks like not ELF, IPAR and AXON happen much more often than stocks like FSLR today. And by the way, FSLR attempted breakdown, then re-breakout, attempted breakdown, then re-breakout. It's a very volatile, too volatile market for me. All right, so now we're on the Ticketz indicator in this lower pane, and we're looking at the QQQ on the daily. Everything is fine here. As long as the Ticketz indicator is above the zero line, there is no reason to be bearish on this tape. And you'll notice in November, on the daily time frame, it flipped green, or above the zero line, I should say, and we've rallied since. And this is the 50 SMA, and per this indicator, price should not be below the 50 SMA if this indicator is above the zero line. This is really the last time it's happened for any prolonged period of time, and as you can see, the QQQ has been straight up. Now, that being said, I want you to look at this closely. High, higher high, higher high. Ticketz indicator. High, lower high, lower high. We'll see what that does, but it's hinting that there isn't a whole lot of power to this move. And also, when we look at the Squeeze Pro momentum, look at it on this move higher. Now look at it on this move higher. Now look at it on this move higher. This is called negative divergence, guys. And that's in the QQQ moving higher. So we're just going to look at the daily time frame there. Also, actually, I'm a liar. We're going to look at the weekly also because the weekly is what tells me we're going to go back to that relative strength line. When the Ticketz indicator on the weekly time frame is below zero, that's a risk-off market for me. We're still below zero on the QQQ. We're almost there, but we're not there yet. So now we're going to do SPY, but we're going to move backwards, and then we'll end this video lesson because it's getting long. The SPY, you can see here, Ticketz indicator crosses below the zero line here, been below the zero line the entire way on the weekly. So that's telling me risk off. IWM, don't even need to look at it, right, guys? We know that it's below the zero line. There's no even questions about that. Now, the 1 year, 1 day on the SPY, here we go again. We're good. We're above the zero line. We've been above the zero line. But once again, high here, higher high here, equal high here. Now let's look at the Ticketz indicator. Okay, high here, lower high, while price hit higher highs. Price matches back to those previous highs, lower highs on the Ticketz indicator. It's going the wrong way. So we're losing momentum there. Also, same thing with the TTM squeeze. Negative divergence. Does it mean it has to roll over, pull back, and just continue to chop? No. Does it indicate that we'll probably continue to chop? Sure does. Does it indicate that we can't break out? Nope. I actually believe that we have room not only to the October highs in the SPY. Let's see if I can go back further. 1 year, let's do 2 years. Let's open this up a little bit. I think, personally, we could go all the way back to this level, 460 on the SPY, before we re-enter chop. So I not only think that we have room to 420, that we could keep doing this, but I think we could possibly go to 460. Now, getting to my time frame of operation using this Ticketz indicator on the bottom panel, I want you to look at this Ticketz indicator on the hourly time frame. I'm going to open it up, 90 days, so we can get a real good look at it. This Ticketz indicator crossed below the zero line on an hourly time frame back on April 25th. As the saying goes, this price action should not be above the 50 if the Ticketz indicator is below zero. Crashes through the 50, gets back above the 50, the Ticketz indicator is below zero, crashes back below. Now we're back above the 50, Ticketz indicator still below zero, and now we're basically oscillating, vacillating in between the ranges. So the entire time, how this indicator could have kept you safe every time the SPY broke out above the 50 is, this indicator's below zero, when price is above 50, stay away. So, long video lesson. We went over a lot, but basically what I've just showed you with these longer term charts is we are not there yet. If you think that we have bottomed, that is fine. It's very possible. I am still more than welcomed for any market pullback to SPY 370, 350 to go. Basically, if I can get SPY 350 again on a pullback, I'll be all in the long-term portfolios via the allocation towards SPY and QQQ. But it doesn't matter. Even if we pull back or consolidate or chop around, I'm adding to the long-term portfolios one stock every 2 weeks that's related or connected to the mega caps. Quarterly portfolios are on pause until quantitative easing comes back. End of day swing and position trades remain smallest asset allocated size ever. I increased size recently and I've pared it back. I've had too many stocks failing immediately before I can even move up my protective stops to minimize even the small losses. And you would think with trading the smallest size ever, that would be basically keeping the account flat. Nope. Year to date, my end of day swing account is red. I'm red on a year when the NASDAQ's up 20%. That tells me more than any other information. That being said, all the day trading accounts are at all-time highs. Any coincidence? I think not. Get in the chat room if you want to make money, because the end of day side, if I've shown you anything in these charts, it's going to remain choppy, sloppy, and difficult to manage in the short to intermediate term. Have a great Mother's Day weekend, everyone. Aloha.